The traditional accounting methods that we often use, right, are traditional accounting practices where we budget for our expenses and then we go generate the revenue and then whatever remains is profit. But how are you supposed to get really far ahead if that's what you're working with? This profit first model forces you to think about profit as its own entity. Welcome back to In the House podcast. My name is Toni Singh.
Welcome back. I'm Jenny Woon.
And our topic for discussion today is 3 things we wish we knew as young entrepreneurs related to money.
Ooh, very good topic.
We had
a guest earlier in last year, Selena Gray, to talk about the relationship with money. But we never really talked about what you need to invest, how much you need to invest into the business when you're starting off as a real estate agent.
Yeah. And even as your business grows, right? You got to plan for taxes and things. That's one of the points on here.
Oh, man.
It's a fun discussion.
Every year I sit in my accountant's boardroom office.
Yes.
And I'm like, why am I doing this? I would love to just be in the Bahamas, not paying much taxes.
I think we've all thought about that recently. So you're on to something, and that might be a podcast topic for another day. But the real estate industry is really interesting, as you guys all know, right? Because if you think about it, and there's different levels of, I guess, real estate business and selling real estate. Like when you first start out, you're starting out most of the time in your personal name, right? So I would sell as Toni Singh.
I would sell as Jenny Woon.
Yeah. And it's basically like, okay, so the goal is to sell homes and possibly make money. But in that scenario, it's like, okay, so yeah, my goal, let's say, is $100,000 a year, just saying, we're picking a round figure. What happens with the $100,000? Like, am I thinking about the future? So this is why this topic came up, because if you wanted to make $100,000, but you haven't calculated things like how much it costs you to live on a personal budget, is the $100,000 enough?
So never mind just trying to put food on the table for dinner, for lunch, for breakfast.
Right.
Paying for your gym membership,
Fun
paying for your
things.
cell phone.
Vacation. What happens if you want to take a sunny vacation or something and that's not budgeted for? And you get into a completely different area if... like Jenny, we're both personal real estate corporations now, correct?
Yes.
So there's personal income that we pay ourselves. And then the business also kind of operates as its own, and it's its own entity, right? So the first point we have on here for 3 things we wish we knew as young entrepreneurs, and it's related to money, are paying yourself first via things like the profit first model.
Okay.
What
Where
does
is this
that
model from?
mean? This model was, I think it was first talked about in Michaelwitz's book. I don't know how to pronounce his last name, you guys. I'm sorry. Michalowicz. I think it was Michalowicz.
Okay.
Mike Michalowicz, I want to say.
Your business is about to become permanently profitable.
That's right. And the profit first model is basically a method that helps small businesses ensure they turn a profit. Because if you're a small business and you don't have enough money to hire help, everything is falling on you. I think the old school way that people used to do it, it's kind of like, okay, well, I made $100,000. My expenses are, let's say, $60,000, and therefore my profit is maybe 40 or a little bit less. But in this book, he outlines something completely different. It's a different way of doing it, and it's actually it is paying yourself first, so that and that would be based on a budget, right? Like, are you paying yourself enough that will match your monthly expenses? And the second part of it is actually calculating what profit you want and minusing that and putting it into a separate account. So the formula for this would be, okay, my real estate sales, call it $100,000, minus my profit, not minus my expenses. So sales minus profit equals my expenses. Expenses then being what I can reinvest into my business.
What a great way to think about that.
It's different, right? Because how many times in this industry have we seen other professionals You could make a lot of money at it, but then they don't have a lot of money to invest or save or even pay for expenses because they're not utilizing this model. Anyhow, so that's just one thing that I wish that I knew this as a young entrepreneur, because I didn't plan this way. Did you? Like, how did you plan?
You know, growing up, I didn't live with like a scarcity mindset.
Yes.
More than anything, I lived with just continuously chasing a dream. But okay, so my money archetype
Yeah.
is I'm an alchemist. And what that
Yeah,
means
so
is
cool.
all I do is I just keep doing what I want to do, like fulfilling my dreams, and the money will
It just
show
gets
up,
there.
right?
I like
And
that.
it'll somehow present itself because of the good things that I'm doing in life.
Oh, I wish I had more of that. My top one was actually accumulator.
Okay. But here's the thing, that doesn't work for everybody, because for me, I mean, it's probably not a very good strategic move for me to do that, because of course there's always the necessities you have to cover.
Sure.
I think though, because I was growing up with multiple, like as I was in high school and in university, I always worked 3 or 4 jobs to keep myself busy and to keep myself growing and to ensure that I can pay bills and save up money. It was already in my mindset to do that. So I was, yeah.
Well, okay. And so that's great for you, but most people don't have that in their mindset growing up. Everyone grows up differently, right? And so the traditional accounting methods that we often use, right, are traditional accounting practices where we budget for our expenses and then we go generate the revenue, and then whatever remains is profit. But how are you supposed to get really far ahead if that's what you're working with? This profit first model forces you to think about profit as its own entity, which I love, because there could be more pie at the end of the day for you and me.
Yeah, absolutely.
Okay, so that's one thing that I wish I knew earlier.
When someone is starting off in the business, how much savings
Oh, such a
should
good
they
question.
have?
I don't know. How much do you think?
I want to say about 30,000, like a safety net of
Yeah,
30,000.
I would say at least, well, you could do it on 25, which is basically 30, but you'd have to be really careful.
Okay, so the reason why is, okay, let's break it down to about $1,000 in board fees, desk fees,
Okay.
for example. Okay, taxes, insurance. Okay, so that's about 1,000.
Yeah.
So we have 9,000 left. So then,
Licensing fees.
yeah, including that.
Okay.
We're not talking about startup cost. We're talking about
Monthly costs.
monthly
Okay.
cost.
Yeah.
Okay, startup cost. Yeah,
I was
need
going to say
about
then you need
you
more.
need about 5,000.
Okay.
For startup costs, but just to get your license.
Yeah.
So the monthly fees about 1,000 for desk fees and deal fee. Licensing monthly
Dues.
fees, dues. Okay, now you have. Let's just put aside the cost of doing business. So internet, you have gas, and your cell phone. What else?
Your shelter. Are we going to include this in here?
Let's talk only what pertains to the business. Okay, so
You guys are living homeless. We're just talking about the business.
yeah, so this is putting money into the business, 10,000 a month
Yeah. Okay.
for the first 3 months. So because the question is, how much do you need to start up, right?
Sure.
Okay, so let's just say $1,000 for those costs.
Yeah.
Okay, now you are needing signages, and branding.
Yeah.
So I'm gonna say that's gonna cost at least, let's say, 5,000.
Well, how many signs are you getting?
Well, branding. Let's just say you're not doing your own branding. You're getting another company to do branding. You're setting up your CRM. You're setting up your
Are they doing a website too?
your website.
Then it's definitely
Right.
over 30K. It's definitely
Your
over 30.
website, your CRM, your brand, your signs.
Yeah, the signs are expensive.
Maybe you're setting up, branding, social media assets, and everything. So let's just say that's 5,000. So what do we at? 1, 2, 3, 4. That's 7,000. Okay, we're at 7,000.
Yeah.
So the remaining 3,000,
For marketing.
yeah, marketing, lead gen.
But that's what I'm saying. I'm like, honestly, yeah, you could do it with 30,000, but you need to be out there right away and turning a profit right away. Like selling, you need to list property, or you need to be working with buyers and closing on a contract.
And
Probably
have 30,000 saved up for
at
the first 2
minimum,
months because you may not get paid
That's
for
right.
90 days.
Yeah. Or more.
So would you say 30,000 is pretty accurate, give or take?
It is. If it was me, I would want 60.
Okay.
Because-
Okay,
yeah, that's the accumulator.
So our point is that I think there's an easy entry. It's a very easy entry into the business.
Yes.
And most people think, you can just post about yourself, talking about real estate, and then you get deals and you get clients off the hook on your phone, like calling you on the phone. But it really isn't that easy.
It's true. It's true. So I think that, no, thank you for that, Jenny. That's pretty accurate.
You're welcome.
Yeah.
Okay, so now we talked about sales minus the profit equals expenses.
That can be invested back into the business, right? So we're trying to be profitable here. We're running this like a business. For me, at least, the second thing that I wish that I had discovered earlier, I guess I just wasn't thinking about it, was working in real estate and investing. So working and investing, but with wealth overall in mind. That's a pretty blanket statement. But basically what I mean is, how in busy markets, it's very easy to get caught up in the transactions, or it's like, I don't know, you've got 4 or 5 deals going on at the same time and you're working in the business, not thinking about what you're going to do with the money once the sales close. It is important to have a longer term plan. Like, for example, are you putting it back into the business wisely? By percentage, what percentage would you think, once you're an established realtor, would be a good percentage to put back into the business? Everyone's stuff is different, right? Because you could be doing online lead drips, which are a different type of cost. But I think that I've heard some people say 13 to 18%.
I was going to land about 15%.
Yeah. Okay. So that's about the average. So are you saving it wisely? Are you investing it wisely? Are you putting it back into the business wisely? What about looking to the future? What kind of experiences do you want to have? Are you looking at creating passive income either through real estate or some other endeavor? Right? So it's like, I think a lot of agents, from my experience in being in the business for so long, I don't know that everybody's focused on that. I can see how it can often be like a shorter term, like I'm focused on the short term, getting the deal done, but what are you going to do with your profits and rewards once it's complete and you're building something? What about you? Like, you obviously never had the scarcity mindset. You're an alchemist of money, so you can transfer it and create it however you want. But have you noticed something similar with any of the agents either in your office or in the industry?
I often find that there's tons of agents who actually don't have any savings. So they're actually coming in with absolutely nothing.
Okay, that's hard.
Yeah,
That's really hard.
And the issue is that they're so used to getting a paycheck on the 15th and the 31st.
Yes, it's a totally different mentality.
It's a different style of I guess, what would you call it? Like,
I think it's because no matter what, like if you're working for someone and you're used to getting paid 2 times a month, as long as you show up for the job, right? Presumably you're getting paid. When people enter real estate, they don't realize that that's not happens. You are the workhorse, especially if you're starting out on your own and you're not with a team. So you're covering all of it, and you need to make enough to cover all of it and then reinvest it back in. So I have a tip here, which is save half of what you make on every single commission check. Because, if you're just depositing checks into an account, it can be really difficult to see, like, what's the difference. If you had $100,000 in an account, it's not really $100,000, is it? It's not, because you've got operating expenses that you're going to put back into your business. If you are a prec, that's a totally different thing. You have to pay yourself a separate salary, but then the salary would would fall short if you haven't budgeted properly. So tips like this, like saving half of what you make, maybe that's too much, at least 30%, because the tax brackets change too.
Or what did Connie, when she was a guest on her show, something about
she said
earn a
pay yourself
penny?
first. Oh,
What's that phrase that she's
I can't remember. It was so
something
good.
about save a penny. Something like that. Save a penny.
Earn a penny, save a penny, something. We'll have to contact Connie for that.
Yeah. So, okay, your life balance and wealth management definitely has to shift. So having the conversation, perhaps with a financial planner or an accountant, may help. One of the best books out there, I would have to say, is The $1 Million Real Estate Agent.
Oh, it's so good.
And there's a section in there about budgeting.
Yeah.
And that's one of the 4 pillars that is so necessary, is to set up what does it look like when it comes to your expenditures, and what do you need to make to ensure that like what kind of sales, like how much sales do you need to make in order to cover all these expenses.
For sure. And then we just said 3 tips. So the third tip for this, actually, wait, I wanted to go back for a second. That second point, which is working with investment and wealth in mind, like why are you actually doing the job? What are you wanting to create? If your intention is to invest in real estate as a realtor, you might want to be looking into other avenues to do that through a holding company or something like that. I think we're going to have a guest on in the future that's going to distinguish and talk a little bit more about this topic if any of you guys are interested. It's more in depth. So it's possible some of you aren't going to be interested in it, but I think that there's enough of you out there that might want to know how to increase your wealth efficiently with tax savings in mind. So we'll have someone on for that. We're not tax specialists. But what about what's a third thing, Jenny, that you wish that you knew as a young entrepreneur starting out in the business?
Absolutely, as forecasting, business planning. So again, going back to what does your year end look like? If you want to reach a certain, let's just say 200,000 at year end, going backwards and planning out what do you need to do to get to that?
And then if it was 200,000, how much would you actually take away, right? There's like a bigger, larger plan. So yeah, I think mostly when I was first starting out, I just didn't look at the whole picture. In the beginning, it was like, oh yeah, sell more real estate, it's fun. But when I was new, I didn't think about taxes per se or anything, or like the different brackets and like saving money and how to do it. So yeah, those are our top 3 tips, guys. It mostly has to do with future planning and looking at things differently.
And let's talk about PREC, because at what point did you decide to go personal real estate corporation?
I did it too late because I was getting hammered with taxes, which is why I'm talking about taxes, but hammered with taxes, like 50%. So that's a lot, right? Because it's not going to anything and you're not saving it. So when I was speaking with my accountant, and I don't know if this is true, this is what she told me. Obviously, it costs money to keep a corporation going, a PREC. It's about $5,000 currently to open a PREC through the lawyer fees and the accountant fees. So you have to be making enough. If the tax savings are enough, so at like 13%, let's say, for corporate versus 50% on your entire personal, the opportunity cost and cost benefit of switching to a personal real estate corporation makes sense. Someone had said that trigger number is around 80,000. I don't know if that's true. That was an accountant that was at one of the board courses one time. She had said that.
Okay, 80,000. I would have said maybe 120,000, 110,000, but everybody's different, depending on what you have to write off, what your necessities are in life. Maybe you live a little bit more extravagant than I do.
I didn't PREC until I was at 250,000.
Oh, ouch.
Yeah, that hurt. And again, this is why we're having this conversation. It's too high. Any other tips for our listeners or any closing remarks? What is happening next month, Jenny?
Toni, we are going to be in Edmonton on March 16th. Join us if you happen to be in the area and want to be surrounded by a great group of ladies and want to learn and want to figure out how you're going to grow and bloom for the rest of the year. But you also want to know how to infuse harmony in your life. This is an absolute treat for us to be able to deliver some fantastic guests
For
to you.
sure. And I'm really looking forward to meeting these women.
I know what it would be.
They're
Yeah,
going to be
it's different,
awesome.
right?
It's
Yeah,
so
different
different,
environment.
but like-minded women. And you know what, you guys, we probably are going to be doing some posts about that. We might even do a reflection. We'll see.
Yeah,
But we'll let you know how it goes. And yeah, tune in and join us if you can.
awesome. Thanks for tuning in.